what do you look for a home before you say, yeah, this is a right home for me to purchase it? Is it single family homes? Is it townhomes? What style of properties do you buy?
Right now, for example, in the market that we're in, the building price per square foot on average is about $750 a square foot.
So let's talk into deeper dive into your short-term rental portfolio. So how many properties do you own right now? How many doors or how many properties?
When inspection is there for plumbing, your plumber needs to be a certified plumber to do that job. And don't compare yourself. And don't renovate or build illegally. you know,
What are the do's and don'ts for our listeners, so that you would say, do this, but don't do that. Hello and welcome to another episode of Bigger Life Podcast. We are thrilled to have another guest, Zoey Berghoff, with us out of Colorado. She's a dynamic short-term rental investor, coach, and a speaker who's transforming the way we think about vacation property. With a deep passion for creating unforgettable retreats, Zoey specializes in turning ordinary spaces into extraordinary nature-inspiring getaways. Let's talk about that, right? Airbnbs, nature getaways. Her unique approach focuses on designing five-star stays that offers guests more than just a place to sleep, but an immersive, rejuvenating experience that connects them with nature. From charming cabins to luxurious escapes, Zoe knows exactly how to elevate a property to make it stand out in competitive world of short-term rentals. We can't wait to hear more from Zoe. Hey Zoe, how are you doing today?
good, Ray. Thank you for having me on. I'm super excited to dive in.
Great, my pleasure. So Zoe, can you walk us through what were you doing before real estate, before short-term rentals? And we'll get into short-term rentals in a bit.
Yes. Yeah, great question. I was actually working in marketing for a digital marketing agency. So I worked in marketing full time for an agency, and then I actually started pivoting into freelancing for small businesses in that same realm of digital marketing. That was a huge part of my business into real estate because it allowed me to increase my income, kind of see the other side of the 9 to 5 world and what I wanted to make, my life look like and kind of manifest how real estate would come into that. A 9 to 5 at the same time is like having 4 to 5 different freelance jobs, transitioned out of the 9 to 5 world, freelanced, and then that additional income allowed me to get into real estate. And now we full time do real estate. So in a way, my marketing skills translate into our business of real estate, but I no longer am servicing the digital marketing world at this time.
And you said we, so I believe there's more than you who is full time.
Yeah, I guess my husband and I, we run our real estate business together. He is a ton behind the scenes, building the stays, renovating the stays, bringing those to life, GCing the projects, and then everything, guest interaction I do myself. So I guess the real estate business is a we. The marketing business that I did prior and freelancing was myself. I didn't have a team. I kind of kept it hustle kind of business where I could take 4 to 5 clients on my own. I never really would go past that because my workload could not keep up with, what I was able to do. And I personally didn't want to scale a marketing agency. I know that's super popular. A lot of people do it. I worked for agencies. It wasn't really my cup of tea. And then we, built the real estate together. So it's not something I do solely myself. We built it before we were married as partners, and now we're married.
Awesome. So let's talk into our deeper dive into your short-term rental portfolio. So how many properties do you own right now? How many doors or how many properties?
Yeah, great question. So we have 3 short-term rentals currently operating. We have 2 ground-up developments coming this spring. And then we have a few co-host clients that I do work for. I don't advertise co-host services, but if they find me and they have a really unique property and it's not something in their wheelhouse, I will take them on. And then we are kind of dabbling into more of the micro resort commercial side of real estate as well right now, which may not be directly adding to our short-term rental portfolio, but it would definitely expand with the amount of units we're looking at.
Sure. That's an interesting way to do things. So we have so many different segments that you guys are doing, right? So let's go into each segment in
Mhm.
detail and we'll touch upon what that means and also the numbers and how you manage it and things like that. Okay. So for your short-term rentals that are up and running, what do you look for a home before you say, yeah, this is a right home for me to purchase it? Is it single family homes? Is it townhomes? What style of properties do you buy?
Yeah, so we actually really like to look for properties that allow the strategy of land tacking, which is multiple streams of income on one property that allows you to increase your income and revenue and cash flow, but it doesn't necessarily increase your headache and operations and expenses. So our first property was raw land that was developed with a custom build, and then a glamping property. That property now is supporting more structures on that same land. So we don't have to go find a new market, new teams, new, utilities, new land. We're actually ensuring we have the correct zoning to support accessory dwelling units on a single family home that may be deemed residential. We also look for properties that we can do a huge value add in terms of extensive renovation, or if we can build another structure on the property. We did a 15-month long renovation on our most recent project. And the reason we're looking for that value add right away is we want to play and tap into that equity sooner and force appreciate that property than wait, the 5 to 10, 20 years that a current standing traditional single family home that's ready to operate turnkey may bring. We want to find the worst home on the best neighborhood street or bring it to life and build it if it doesn't exist.
So let's talk about land tacking. So you purchase land and then you build a custom home on it, and then you're using multiple other structures like glamping and other structures over there. How big is the land parcel?
Mm-hmm.
And how much did it cost you? And then let's deeper into the numbers like custom home
Mm-hmm.
build, and then how many structures you have, how much each structure costed you, and then from there, how much revenue you're collecting, things like
Mm-hmm.
that.
Yeah, so it actually doesn't matter what the land size is. You could have half an acre, you could have 45 acres. It depends on the zoning and the county allowability of what you can do with that property. So I really stress to my students in my mentorship of, ensuring we have the correct zoning before purchasing a property so that if we want to expand or build more stays, they could be separate stays. They could be stays that complete a more micro resort where it's, they're all visible within one eyesight, or you could have 30 acres and each property you don't even realize is on the same structures of the same property. It really depends on more so the zoning, not the size of the land. We have a property, both are allowed a single family home and an accessory dwelling unit. One is half an acre, one's 35 acres. So it literally is such a spread. It's more so you need to do the due diligence with the county, the city, the township, and the zoning of the property and what it's able to support to be able to do that. And then some markets, we're actually, I think, seeing this trend is going to continue to go this way, where building a brand new custom home could be possibly more affordable price per square foot than buying what's available on the market and the amount of renovation or work it may need. And honestly, sometimes building is easier than extensive renovation, speaking from experience. But in the markets that we're looking for, there is really big projects that you can take on, or you could build something from the ground up the way you want. And especially for short-term rentals, for anyone that's operating or owns them, they don't necessarily function like a residential single family home that has a primary family in it. When we renovate and build stays, we are very strategic about how those spaces are going to be used. And we don't do massive bedrooms with huge walk-in closets because that's not necessarily going to increase your ROI of that property. You want to have more open floor plans and layouts and amenities. So we're very strategic on how those properties come to life, but then ensuring they hold their value in the market. If you ever did sell to a family or a primary, you're not going to be the short-term rental that has murals all over the wall that no one actually wants to live in. So it's a very fine line of a balance. Right now, for example, in the market that we're in, the building price per square foot on average is about $750 a square foot. So you'd build 1,000 square feet for $750,000. We're building with the types of builds and just the team that we've done for about $150 to $300 a square foot. Same with our renovation costs. And right now, to buy on the market, you're seeing anywhere from a $500 square foot plus. So for us, building has made more sense than buying something on the market. And I think with the more unique stays coming to life, we're going to see more people realizing that you may have to bring them to life yourself and they don't necessarily already exist on the market.
Absolutely. I have done a couple renovations myself, and I have one more pending renovation that's in progress. And the lesson learned is I don't think I want to do renovations again.
Yeah.
And actually, I bought another lot, and the permits are already pulled on it, but I'm holding on to it, the ground up until I wrap up this renovation.
Hmm.
Because to your point, I mean, theoretically, it's so much easier to do a new build than doing all
Hmm.
this renovation when you don't know what could go wrong, right? You open up the walls and then you're like, okay, now I have to change all my plumbing, and now I have to change all my electrical, and now I have to do this and that. Oh, come on. And plus, the floor plan is not according to your needs. I mean, you can change it slightly a little bit, but you can do a whole lot.
Yes, 100%. And honestly, like people don't believe me when I say that a build could be easier because yes, there is some, you have to bring utilities to the property if it doesn't already support them. So there's that aspect of infrastructure. But honestly, with our most recent renovation we did, it was 15 months. We had to do all new electrical. We still had to pull building permits just like a single family home build. We had to do all new plumbing. We had to rip the walls down, insulate, drywall, roof, siding. Like we literally spent about what you could spend on a brand new build on a renovation because you're basically you never know what the underneath the walls, like you said, what's going to uncover itself. And you also are re-engineering poorly engineered things most of the time that just weren't to code, weren't done correctly, were done 80 years ago that no one really has any idea why it was done that way, or it's just poorly DIY'd. So especially for a short-term rental, the way they're operating and the way people function in them and how they're staying, 2 to 4 day stays, not 30 days at a time. They just operate differently, and it can be a better opportunity to just build it the right way, the way you want, and the way that the guest wants to use the property. Than a renovation. And I agree, like we are very hesitant that we will only take on specific renovations after having done them versus builds. It doesn't always mean it's easier because there's something already there.
Yeah, no, absolutely agree with that. Now, in terms of cost for new build, you said you see the cost from anywhere from what, 150 to 300?
Yeah, that's like pretty standard for the nationwide average. It's obviously going to depend on your market and where you are and what your building, costs are and what your builder availability and labor cost is going to be. But if you just pull a standard, 1,000 to 2,000 square foot home, you may be able to get into that 150, 175 to $300 per square foot. I think it's also something to say is like when you're building for a short-term rental, you're not building your dream home. So you have to understand like where to put their costs that are going to be reflected in ROI and where, your custom designed marble bathroom may not necessarily be felt by guest ROI. And that's more of a personal want. So you really have to, you don't have to go so custom that you're building $1 million homes every single time. But that's where, finding the right builder, finding the right structure that's going to do well in your market is super important. But we did a renovation for $300 a square foot and we are building for 300 square foot. So, like, they are not always one makes more sense than the other.
Yeah. So, in terms of the floor plan, let's talk about that. If you're building a new home, so what kind of, and we are talking short-term rental market here, right, specifically. So, what's the typical size that you aim for, and what kind of amenities or what kind of floor plan that you aim for?
Yes, good question. So that's going to differ between any market that someone is investing in. And what I like to say is your market can help decide what that should look like and what your size should be, what your amenities should be. Obviously, you may have your own wants of like super modern or Scandinavian or a log home. But what I like to do is I actually use competitors to support the data of, if my entire market's 75% 3 bedroom, 3 bath homes, but if I get into that 4 bedroom category and I knock out 75% of my competitors and I'm in a smaller category, that could be a leverage point for you to go into that space size versus 3 bedrooms. And that doesn't necessarily mean the house has to be an insane size of square footage larger. I also like to be aware of who my demographic is going to be and who I'm building for. So usually we're doing honeymoons, anniversaries, couple getaways. None of our stays go above 6 people. Like we are not hosting bachelorette parties or huge gatherings, retreats. We don't necessarily want to, and we're still able to get an average nightly rate of 450 to 600, even though it may only host 2 to 4 people. So your amenities are big. We have hot tubs, we have saunas, we have very open windows, outdoor spaces, deck spaces, private seating areas, modern furnishings are all things to play into. So it really depends on your market, who you want to host to, because really as you're in the hosting game for years, you realize that you don't want to host to everyone. Like you don't want to be everyone's cup of tea. You want to have your demographic that's a perfect fit for your property. They're going to absolutely love it. But you don't want to host to every single person coming into the market because some people are going to be super happy and some people won't be as happy, speaking from experience. So I think it's our job to set that expectation and really make it clear on who those spaces are for.
Yeah, let's do a deeper dive into project that you did maybe with a half acre, right? So, how much was the land cost over there?
Yeah, so that property, the half acre, was actually a renovation. It already existed. So we purchased, it was listed at 650. We purchased it a year later, still on the market for 395. We put about 200,000 into the renovation, give or take. So, we're all in for, let's say, 600. The point of that purchase of a property, it has the zoning to support an accessory dwelling unit. So if we choose to scale or build another structure, we have the supporting zoning for that. It was a more equity play than it was cash flow. It was a small property. It's only 1,050 square feet, 4 people max in the home. But that property got appraised 15 months later post renovation at 800,000. So we just tapped into 200,000 in equity right away. That was the purpose of the purchase. But also that property's revenue in the first, we're still in the first year, we launched in August, is estimated at about 150,000 to 175, depending how our peak season goes, which is coming up soon. So that property is unique that it is a huge cash flow property. 150 to 175 for a 4 bedroom, or for a 4 person 2 bedroom, is great. But also, we did it because we wanted forced appreciation and equity, and it was the worst home on the best street. Every home is over $1 million to buy on the street, and this was 395. So we bought the ugliest eyesore that no one wanted to own and made it one of the best houses in the neighborhood for its size.
Sure. Let's talk about the other project then, the custom build that you did. So it was that on the 30 acres?
That's, yeah, 35 acres. It was raw land, raw dirt, nothing existed. No utilities were pulled when purchased. My husband sought out the land and was ready to go all in on land. So we did a land purchase for 35 acres, about 175,000 for the land. We built a custom 3 bed 2 bath home on it for about 225. So we're like, let's say all in for that property at 450. And that property obviously is very large at 35 acres. It has the ability to support multiple structures. So there's multiple income streams coming from that one property. And what I tell people is you don't realize that your team stays the same, your cleaners stay the same, your maintenance. When you're an owner visiting the property, you see all of your properties or structures in one visit. There's a lot of reduced headache when you go with the land tacking approach rather than having to find all new markets all around the country with new teams. Even when you're, let's say, breaking ground and building on existing property you already own, you know your numbers pretty concrete. You are your own metrics. I don't necessarily suggest people build the same exact size or directed stay because you're kind of becoming your own competition, but you have insights on your actual numbers. You don't only have to go off AirDNA when you're going into the same market.
And did you purchase, like, I would imagine like 35 acres should be a little bit in the suburb of Colorado. Is that where it is?
Yeah, I mean, it's a little bit more rural. It's at 8,000 feet in elevation, so it's, on a mountain. Has really great views, but it is about 20 minutes from town, 25 minutes from town. So that's also when I say, like, you don't want to be everyone's cup of tea and where everyone wants to stay, because the guests who want to be close to town probably shouldn't stay at that property of ours. But one of our other properties is 2 minutes from town, easy access, easy convenience, way lower in elevation. So those two stays are literally half a mile from each other, but they are completely different demographics in the same market.
Sure. And since it's kind of away, so how did you kind of run the comps for it? So because it's easier to run comps on something that's in the city where you have a lot of competition, but competition also brings analysis. But when as you're getting out of city and into something a little bit more rural, you don't have much competition or you don't have enough data.
Yes. Great question. So sometimes I feel like with unique stays, what I tell people is your comp ratio, or like your comp radius, may not be your specific market. You may have to broaden your comps to, especially if you're doing a unique stay, like a yurt or storage container home or a mirrored home. You may have to expand that radius to be, the entire state or 3 hour driving distance from you, to see what, their calendars are looking like, what people are saying, what their reviews are saying, how people like the stay. What you can do is you can always pull your comps in your direct market for, let's say, a 2 bed 2 bath. But really, what people don't realize is there is going to be a price attached to that wow factor or that uniqueness or that view or those amenities that you have. And you have to, sometimes you're the first trial and error in your market. Sometimes you are having a close competitor. But like a 2 bedroom 2 bath traditional track home Airbnb, is not going to necessarily comp directly to a custom two bed, two bath renovation designed for what it's intended to be used for. So there's a lot of, it's something that I teach my students pretty thoroughly because you have to run a few different analysis. You have to run aggressive, conservative, but you also have to take into account what is that unique factor bringing you in revenue that really no one else in the market is seeing. And there is a price to be paid or rewarded for those that are willing to kind of step out of the box. And I also think like you yourself as a host are a customer and a guest. And if you're building something really cool that you would want to stay in, there's likely people that are going to also want to stay in it. I know this one really unique stay host who she literally says, which I'm not advising this by any means, but she says, like, I don't run any data. I don't run any comps. I don't invest in markets that have a ton of competitors or anyone. I build things that I think are really cool and people come to them. I'm not saying that's like the method to follow. We do a little bit more data than that, but sometimes it just takes like the visionaries and the creative, vision to bring something to life that other people want but aren't willing to do because it doesn't pencil. And sometimes, the best deals don't always pencil on the analysis sheet very well.
I know, and I have heard that before. So I could
Yeah.
relate to it, where,
Yeah.
and personally, even I have done some deals where I just did a deal. I don't know why. I mean, there was no rhyme or reason. I had no
Yeah.
data. I mean, I just felt it right.
Yep.
So,
100%. Yeah, sometimes
uh,
I do tell people, like, sometimes the right property will just find you and speak to you, and, like, everything will line up a little too well where you're like, it's meant for me, I have to do it. I'm not saying, like, don't just, like, throw things into the wind and go for it, but sometimes, like, that is the power of real estate is, like, our cabin property, it cash flowed, cash on cash return was 36%. It was well above, but really like the entire deal didn't make sense to anyone. It was on the market for 12 months. No one wanted to buy it. No one put offers on it. And now throughout that renovation, we had people stopping us on the street saying like, what's your price? I'll buy it right now. And it's like, sometimes you just have to have the vision and see the opportunity before everyone else does. And I feel that's like our job as real estate professionals is you have to see opportunity before it is there and before anyone else sees it. And then if you can, pounce on that and take advantage of that, you'll have a gold mine.
sure. To our listeners, if you're a first-time investor, this methodology is no way
Yes.
recommended where you don't
Yeah.
run your numbers. So yeah, definitely run your numbers and
Yes.
only do the deals where your risk capability kind of allows you.
Exactly. Yeah. And I think I also have been really stressing on, especially like in the market of real estate right now, is like properties are going to be cash flow kings or equity kings. And sometimes it's not a 50-50 split for a property. Like if you're a first time investor, you need to analyze is cash flow more important or is equity more important to me? Because cash flow will make you rich, equity will make you wealthy, but it doesn't mean they play at the exact same point in your journey. So if you're someone who wants to increase your day-to-day cash flow and you need that cash flow to be more 9 to 5 optional or quit your job, you should find a heavy cash flowing property, which is probably going to be a market that is a little bit more affordable. But if you're someone who loves their job, has great W 2 income, doesn't plan on leaving anytime soon, it could be a better strategy to go into a more equity forced appreciation market. So in a few years, that first property can bring you to your next deal faster. And I don't think people are doing a fair assumption that like every property is going to be a perfect cash flow, perfect equity play. Like that just isn't always how it goes. There are some of those rare gems in the, nation that do experience both of those at the right time, but I think people just put too much pressure that that's keeping them from getting started. And like you don't get to experience the cash flow or the equity until you jump in the game. Like it's, you have to get started to experience either of them.
And let's talk glamping. So you mentioned early on that you guys are also doing glamping. So is it on the same 35-acre property that you have put some glamping tents over there?
Yeah, so we have done glamping, seasonal properties that only operate in warmer months in Colorado, which is something that I would, encourage people to think about is what type of stays are going to be the best suited for your temperature, climate, where you're at. Glamping is a great strategy and avenue. I personally, there's 2 points to it. It's a huge cash flow play. Like your glamping will sometimes pay itself off in the first year. And that's pretty standard for the way they pencil. Huge cash flow play. You can save that cash flow, put it into maybe more appreciating assets or real estate. Or because some people come to me like, glamping doesn't appreciate. It's not on a fixed foundation. It's, not necessarily always tied into utilities. But I will say we're seeing in the industry, people are selling glamping properties as a business. So if you have the right books to sell that business, you may not be relying on appreciation as much. You're being, based off of your revenue potential of that property. So I think early on, glamping was a concern because it didn't hold appreciation like a single family foundation built home. But now we're seeing that, I mean, there's some glamping properties, you guys, that are like raking in the money because their stays are 50,000 a piece and they have 10 of them on one property. You definitely have to find the right zoning, the right county. Usually counties that don't have super strict permitting and, rules to follow are the ones that you'll find them in. But it's a great market and model for those that want to host that demographic. But I will say glamping is not for everyone. Like you are not going to fall into everyone's cup of tea, and that's okay.
And how long you have been doing this, the other project, the custom built 35 acre?
We will be going into our fourth year on that property.
Okay, great. So how many structures you got? So you got a custom built home, and then you got how many glamping tents over there?
So we only have one due to our county zoning on that property. We won't expand. It will not be like an auto camp. That's like people always say, like, why don't you put 40 yurts on it? There's 40 acres or whatever. You can't do that. You don't get to just do what you want. If that's a reality for anyone, like you have to follow the rules. So that property, we're actually expanding to additional custom family homes that will stay on foundations on that property, add a ton of equity, value of the entire property. And, glamping is great, but it really is not going to be, they're not designed to last 30 years. They're not designed to be lived in full time. There's going to be a lifetime placed on glamping units and structures. So, we kind of feel like we're on the tail end of that and we don't want to reinvest all that capital into glamping. We'd rather have something that's more structural, but that's also our climate is rough. We're at 8,000 feet in the winter in Colorado. Like you are not the easiest conditions. So I think that also could be different for someone in the desert or Tennessee or Florida where you aren't battling Mother Nature a lot of times.
They're battling Mother Nature in a different sense, but yeah,
Yes.
uh,
Yeah, exactly.
we
Yeah.
all are facing
Different.
it in a different sense there. Yeah.
Yep. Much different.
And what kind of cash flow is that property doing for you?
That property, cash flow wise, it is a very high producing cash flowing property because the custom build price that was pretty low and because of the sweat equity we put into the property, we're able to keep our costs low, our building costs low. And that property can generate anywhere from like 80 to 100,000 in profit a year because our expenses are low. So we're not building homes that are $10,000 a month in expenses. That's something we're pretty strategic on, and they're not mansions either. So big reward and price to someone who's willing to buy land and develop it the way that it's going to be used and envisioned for. I know it's not for everyone. I know it's a lot of work. I know it takes time. So you're taking, you take a hit because you don't get to cash flow day one. You have to literally bring something to life for a year or two to see that cash flow, but that cash flow could be double what an already turnkey property is. So it's like, there's a cost of entry on either end.
And how many more structures are you guys building over there now? What's the vision for that?
Yeah, we'll build two more structures on that property, and that officially will max out the support of it. One will be a lived in structure, and the other will kind of be like a wellness shop area that we have so much equipment to keep that property open for our team and just all the things that it's time to put that in. It's just the conditions that we're in. I don't think that property is something that a ton of people would own and want to operate. It takes a lot of machines and love to own it and keep it operating. Um, but our biggest competitor in our market is 2,000 feet above us. So it's like something to be said that if you have a good thing, someone else might find it and want a part of it too.
Yeah, absolutely. In terms of insurance, so insurance is a big thing everywhere. So how is the Colorado's insurance market? Is it affordable? It has gone crazy. So Where are you guys at?
Yeah, good question. Insurance hasn't been super crazy in price for us. I will say some people have pulled out of Colorado due to the wildfires. We are not in Denver metro city area, so we have, let's say, less like proper insurance can't necessarily insure our entire properties like a homeowner policy. They can do liability, but they don't do the fire zone that we're in. So we did not have a hard time finding insurance, but we haven't, let's say we can't go switch providers all the time because there's not as many to choose from. Our insurance costs have not skyrocketed. They have not broken deals. They have not, been the reason why they don't pencil, luckily. So that's helpful. But, you definitely want to be aware that if you're purchasing in a fire zone property or if it's even a log cabin, can it be insured? Do people want to insure it? Do they want to lend on it? Those things are definitely important to check off before the purchase. But luckily, we haven't seen insane regulations or insurance for our market.
Great. I mean, that's good. Good to hear.
Mhm.
So, what's next? So, what's next as a strategy for you all? Where are you guys thinking that you will be investing further out?
Yeah, great question. I do think this is a strategy too for anyone that's wanting to, put a little bit more sweat equity into their deals. We have built resources, team, labor, we own machinery, we own equipment that we are going to stay in the market that we're in for now until we feel like we've tapped it out and we don't want to go any further. We invest in this market in Colorado, and Colorado is an entire state for equity is a big play for us. That's why we're very specific on what the costs will be at the final end of a project. And then once we pivot from that market, we will see where we go. But we definitely, we have some builds coming up, some ground to break and move some dirt. And then, once we feel like we're priced out of the market or it doesn't make sense, we will go to the next spot. But I do think there's a point to be said about owning multiple properties or having a team in a market and not just going one market, one house, the next market across, states over to another house with a new team. Our logistics are very operable and friendly as an owner to manage. It's not very difficult because, our entire world kind of operates within a 30-minute range, which is super nice.
Yeah, the more closer they are, it's actually better to have it that way because a lot of that team structure, as we were discussing earlier, can be regionalized. But then I also meet people that talk about they don't want to own anything that's less than, 4-hour drive because that makes them kind of
Yeah.
feel for it or, but they everything that they
Yeah.
would invest in is just long-term
Hmm.
investing. And they really don't care where it is as long as the numbers make
Hmm.
sense. So I don't know.
Yeah.
I fall more into the first bucket than the second.
Yeah, you have to really align what makes sense for your personal structure, your personal journey, your lifestyle, how you want it to operate. We are not physically in our market unless we're like actively building or renovating. So we are remote hosts majority of the time, unless we're working on a project and we're, maybe not there the whole time, but we're GCing it and we do see a cost savings the more we're there. So we take that into account. But yeah, I think people don't talk about like all the behind the scenes of owning all around the country or owning all different markets, all different seasons. I definitely would like down the road to find a market that their peak season is opposite of our peak season. And I think that's strategic because it keeps your cash flow at a more even basis. So if your highest season is summer in your current market, maybe go find a market that the highest season is going to be winter, and you kind of keep that even flow of cash flow rather than even just like operation wise, like you're if every market you're in is summer peak season, you're going to be really dialed in for summer all the time because you can't kind of create that even flow because every property you own is peaking at the same time.
Absolutely. My brother-in-law owns a property it's on the Outer Banks in North Carolina, and they have that seasonality issue as well. Okay, great. So, what are the do's and don'ts for our listeners, so that you would say, do this, but don't do that if you're entering into this market?
Yeah, good question. So one of the do's that I do recommend for anyone in any type of property is always get three quotes, three bids. I don't care what it is, if it's tiling, if it's a new roof, get three bids because you need to know. And I'm not saying the cheapest or the most expensive is the best one, but you just need to know you're in the ballpark of the same genre of price. So three bids is a must. I also recommend for if you're ever hiring contractors, the interview starts the day you meet them, not the day the job starts. So every little touch point, email, if they say they're going to call you, do they call you? If they're going to show up, do they show up early? Do they show up late? What is your priority? All of those things you need to take into account as an interview on who to work with in any job, not just a contractor, but any trade. I think that's really important. And there's always going to be a bad nail in the haystack, but you got to kind of weed them out and try your best to find who those are going to be before you learn the hard way. But we'll all learn the hard way in some way. And I think lastly, like you should do and build a business that aligns for your life, not because this person did that or this person said this is the best way to go. Like if you feel a calling towards a certain route of real estate or type, you should do that. And don't compare yourself to everyone's journey because you literally cannot replicate someone else's portfolio or timeline or time in the market or how they got in or what their, lending looks like. You have to do what works for you. And don't renovate or build illegally. Submit permits, build to the county. Build to code. I know it's annoying. I know it can be more expensive. I know inspections aren't fun, but it is literally going to increase the value of your project and your home if you ever sold it or when it's appraised. And having a permitted to code property in any regard to what you're doing, plumbing, a new kitchen, whatever it is in your best interest. Do not do things, off the beaten trail and hope that you don't get caught because that's not the way to do it.
And also that I believe, that keeps the contractors kind of in check. When you
Yes.
tell them you have a permit on it, their thought process is slightly different.
Yeah.
And when you don't have a permit, their thought process, and it's the same guy I'm talking about,
Mhm.
the same person. You're doing it with permit, he's thinking, somebody's gonna come and look at it and
Mhm.
inspect it. So I just need to do it the right way.
Yeah, and I think, it shows that you're respecting the project and your business to be a professional, permitted, to code business. And I think, like you said, it holds the contractors and the trades that they also need to be, not everyone needs to be a legitimate business, but like when inspection is there for plumbing, your plumber needs to be a certified plumber to do that job. Same with electricians, like they need to be state certified for Colorado. So like find someone that is. I think, yeah, that's a huge point to, take it serious and they will too.
Yeah, yeah, absolutely. Well, thank you so much. So Zoe,
Sure.
if our listeners want to connect with you, what's the best way to find you?
Yeah. If anyone has any questions or wants to join the mentorship that I have for those, I call it the creative visions are who we attract because it's just the craziest, wildest ideas and I love it. You guys can connect with me on Instagram. It's just at Zoey Berghoff or TikTok, Instagram, website, anything in between. It's just Zoey Berghoff. And yeah, send me a DM, send me your project, send me what you want to do, and I'll be the person being like, it can happen.
Well, for our listeners, thanks for tuning in. Thanks for listening to this episode, and we will be back next week again with another story.
Thank you.